Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, the S&P and the QQQs moving higher. The S&P not substantially, but the QQQs moving in a very healthy fashion. A lot of the big tech names really showed up to play today. Most of all ended higher on the day, and it did help breathe some life back into the S&P. We know that yesterday was a bit of a soft day in terms of volume and in terms of price action. Although today there was not much of an expansion on the S&P, the QQQs actually gaining a little bit more space in relation to the bottom that we had just about a week and a half ago. Now, this is very important because tomorrow we have a bit of a volatility event. Tomorrow morning, we get the good old ADP private employment payrolls change. That should be quite fun. As you can see, the expectation is only for 5,000 new jobs to be added to the private sector. If this number comes in wildly negative, the market's not really going to like that. It's definitely going to do wonders in terms of improving the already high interest rate cut probability for the December 10th meeting, which currently stands at about 89.2%. But it will reiterate people's fears that maybe, just maybe, the economy, especially in terms of the labor market, is not on such strong footing. And thereafter, we get another report the following day, which is the Challenger job cuts report. You might remember this one from last month. That sent the S&P and the QQQs down about 2%. So the next 2 days are absolutely crucial in terms of volatility events and in terms of some insights into the jobs market. So before we embark into those days, you do want to see the bulls put a decent amount of space between us and these lows so that any possible reversal moves to the downside, we have some EMAs, we have some support, but crucially, we have a lot of space to possibly set up for some of these daily higher lows on the S&P, and especially on some of our favorite tech names as part of the QQQs as well, creating a lot of space off the lows here. So in the event that tomorrow and Thursday are a bit negative for the markets, if the jobs report show a couple indications of weakness right there, at least the market has a decent amount of price action baked into it to kind of absorb some of that selling pressure that may come in as a result. So in today's video, guys, we'll be trying to set you guys up in the best possible fashion for these next few days in the market overall. And as a result, in today's video, we'll do a few key things together. Number one, we'll go over some news catalysts that I think could be pretty interesting to go over that happened in today's action. Some Amazon news, some NVIDIA news, some Bitcoin news, and a few other pieces. So we'll look over those first. Thereafter, we will do a big technical analysis rundown of the SPY, the Qs, and the rest of your overall market sectors to see how we are shaping up into the jobs reports tomorrow and Thursday thereafter as well. After that, we will take a look at our big tech names. Big tech had a pretty decent showing today. Some names were a little bit soft, such as Tesla and AMD, but for the most part, a very good showing across the board here. So we will derive, if we do have any dips, where could we possibly be looking for some nice trade or possible long-term portfolio position entries on this big tech name, this big tech list right here. And last but not least, as per usual, yes, we will be going over the biggest gainers and losers of the day, of which, as always, there were many. You can see many companies here were down 7, 10, 15, 20%. So we'll talk about some of the biggest losers of the day and my thoughts on the matter. Are they trade opportunities? Are they no touches? We'll talk about that. And then some of the biggest gainers of the day, of which too, there were very many. A lot of crypto names. Nice rallies today, but many other names included on this list. Are any of these still good opportunities, or are they too far gone to warrant our position? So we'll be taking a look at that at the end of the video. So it should be a very fun one and possibly a shorter one than usual. With that being said, let's jump right into it, shall we? So the S&P up 0.2, the Qs up 0.78. Overall, the heat map was just okay today. Big tech did a lot of the heavy lifting. We know that in the last week of trade, market breadth has been on our side, but in the last 2 days, we've had some pullback events, which in my opinion is completely normal after a huge monster 5-day rally on the Qs and the SPY as well. Maybe we're just giving back a touch in terms of the market breadth and in terms of the gains, but no big red flags as of right now. Big tech arguably got hit the worst during the sell-off period throughout the month of November. So it's nice to see that a few of these names are actually coming back. Some names have powered through the entire time, such as Apple and Google, but it is nice to see Amazon, Meta, NVIDIA, Microsoft starting to participate after their most recent declines. The banking sector today, not the best, I will admit, still a bit soft right there. The healthcare sector, which my big old head hides, also a bit of give back in terms of the gains, but that sector did wonders in terms of keeping the S&P, from total collapse during the November segment. So healthcare pulling back, healthy retracement, and the bottom half of the market very mixed as we keep moving forward and backwards with the rate cut odds in terms of the December 10th meeting. So the bottom half of the market, especially those most sensitive to movements in the 10 and 20-year yields, such as real estate and utilities, suffering a little bit over the course of the day today. Consumer defensives, largely mixed as well. In terms of your one-day relative performance, it looks something like this. Very mixed market led by technology, industrials, and communication services. Sadly, everything else to the downside. But on a one-week relative performance, guys, it's still relatively okay. We are sitting on a lot of gains, broad market gains to be specific. The only ones that have pulled back over the course of the past 1 week have been healthcare and utilities, but those sectors have been performing quite well over the past 3-4 weeks of trade, so they do deserve a much-needed pullback, in my opinion. Fear and greed right now, still quite soft, still in extreme fear territory right now, reading at a 24, leading into those jobs reports. I'll remind you, this fear and greed index is not based on your sentiment. No, it's measured through various momentum indicators, such as the distance from our moving averages, such as the stock price strength measured by net new 52-week highs and lows on the New York Stock Exchange. Not many net new highs as of recently, right? A lot of companies are just coming back for some of their lows, but you would be hard-pressed to say that many companies are breaking new all-time highs. And stock price breadth, right? Although we've come off the lows significantly, it is still a bit of a concern in people's minds and from the McClellan Summation Index as well, right? We are thrusting into highs for market breadth, but still the damage was done and our longer term breadth indicators are still on the softer side of things, although we are off the lows right now. So still in extreme greed, I keep saying it, man, extreme fear territories right now on this index real quick. So in terms of the news events that I thought that should be pretty noteworthy for you guys today, a couple fun ones and a couple important ones. Number one, this one, very important today. So the odds of White House economic advisor Kevin Hassett being the next Fed chairman surged to a record 81%. This is measured through betting markets such as PulLBACK. President Trump saying today he'll announce it soon. And President Trump was in a very big conference with some of his cabinet members today. And when he first got there, he said, the next Fed chair is possibly in the room with us right now. It was a hint towards Kevin Hassett, of course, and the markets would probably like that because we know that Kevin Hassett would do everything in his power to possibly cut rates as aggressively as possible into 2026. Now, whether or not that's the right direction for the economy, et cetera, is open to interpretation, but that is the news from today. Number two, Anthropic possibly preparing to go public as soon as 2026 in what is expected to be one of the biggest IPOs in history, possibly IPOing for $300 billion. Very powerful company right here. It is really up there in the top ranks with OpenAI and other models such as Gemini, Google's Gemini, right? In terms of some of the best large language models in the market right now. So this could be very curious in terms of an IPO, something to keep a watch out for into 2026. The IPO market could get quite hot in 2026. Moving on further, Bank of America advising clients to put up to 4% in crypto. As a matter of fact, between 1 to 4%, saying that despite the recent turbulence in Bitcoin, that they do deem it to be a solid digital asset, of course. So that was measured between more than, right? This is obviously a turning point, right? Because previously the banks didn't really want to touch this stuff. But as we know, several major banks have been doing a lot of back-end work in terms of using the Ethereum network for stable coins and other purposes. And JP Morgan just a few weeks ago has authorized collateralized loans using crypto as collateral. That has never been seen before. So institutions taking bigger and bigger chunks out of the entire crypto market overall and providing a lot of liquidity in the process, possibly at a time where crypto needs it the most. And then we had the big piece of news of the day. This one right here, Amazon to use NVIDIA tech in AI chips as they roll out brand new servers. Now today, Amazon was talking about the success of their Trainium 3 chips, which are ASIC TPUs, of course, and they also hinted at the Trainium 4 chips. Now, initially, over the course of the morning, NVIDIA started off the day, and this is like a direct partnership with NVIDIA, which is why it's so funny. NVIDIA to start off the morning, guys, was up almost 3%. And you'll notice Amazon's chart as well. We started off the day, and we were pretty good leading into the early stages of the morning, right? Amazon came out with that news, and in tandem, they were also speaking with Jensen Huang from NVIDIA, right? And it pretty much crushed both companies, which was absolutely hilarious. And just goes to show how short-sighted the market actually has become on some of these AI headlines. But here's the news The new AWS servers offer 4 times more computing power and 40% less energy use, competing with Google's TPUs that they just put out, arguing that they are actually faster and better than Google's TPUs. AWS, or Amazon Web Services, said it will adopt a technology called NVLink Fusion. Now, if you're paying attention to the GTC conference from NVIDIA, this is a very bullish point in that GTC conference. So they have a partnership now using the NVLink Fusion technology in a future chip known as Trainium 4. The NVLink technology creates speedy connections between different kinds of chips and is one of NVIDIA's crown jewels. Once again, reiterating, guys, NVIDIA's moat is not so much the actual GPUs. The GPUs are great, don't get me wrong, and they're multi-purpose application GPUs as opposed to TPUs, which are really single form and purpose-based tools, right? But NVLink, right, and also the CUDA software system are two of NVIDIA's strongest assets that they have in their moat, right? The technology will help AWS build a bigger AI server that can recognize and communicate with one another faster, a critical factor in training large AI models. As part of the NVIDIA partnership, customers will have access to what AWS is calling AI factories, exclusive AI infrastructure inside their own data centers for greater speed and readiness. This, again, is an NVIDIA feature. This as well was talked about in the last few earnings calls by Jensen Huang and also during the NVIDIA GTC conference too. Together, NVIDIA and AWS are creating the compute fabric for the AI industrial revolution, bringing advanced AI to every company in every country and accelerating the world's path to intelligence, said Jensen Huang today in a statement about this news. Now, the CFO for Amazon did not give absolute power figures on power and performance, but said AWS aims to compete with rivals, including NVIDIA, based on price. Now, once again, the good old GPU versus TPU, the hottest discussion of the last 2 hours, call it about a week and a half at this point in time, once again hurts both of these stocks in their respective price action today, right? That being said, I will reiterate what I just said 2 minutes ago, guys. They're for different purposes. There's too much demand right now. Even if Google is offering their TPUs to external clients, which would be debatable because at the end of the day, other clients may not want the Google TPUs, essentially, because they're training their own AI models and want to develop their own custom chips. But we'll see. TPUs at the current time are used for training AI large language models. How many companies in the world have large language AI models? What, like 4 or 5? Unless you include some of the Chinese competitors, of course, right? Not that many. They are purpose-built for training AI large language models. GPUs are far broader, as we just saw yesterday in the announcement where NVIDIA was investing in Synopsys, right? Moving on further, that was the action of the day in terms of that big Amazon and NVIDIA news, which somehow hurt both companies and at the same time also hurt Google. So it's funny how the market works sometimes, but those are your major news headlines of the day. Some things that I found would be pretty juicy in terms of bringing up for you guys. Hopefully you guys enjoyed that. Now, let's dive into some charts and kind of prepare the table for what might come to be tomorrow when we get the jobs report and even into Thursday. So the S&P right now sitting at equal highs to where we kind of were yesterday and even in the Friday session. That being said, the trend, right, has now been reversed. We are now no longer in a daily downtrend, but the bulls still have to confirm a new daily uptrend. In the event the jobs market provides some weakness to the markets, you got a lot of support below, right? 674, down to about 666 is a nice, call it 7-8 point range with a lot of daily moving averages in there too. And we would just be looking to set up for a daily higher low for possible further trend continuation. Now, I will save you the boring, well, it's not really boring. It was quite interesting. Yesterday and all days prior in the last 4 or 5 videos that I made for you guys, we went over a ton of breadth and momentum indicators, which does give us a bullish leaning bias. We also, once again, went over the bearish short-term narratives versus the bullish long-term tailwinds. And we said that we did take care of a lot of the bearish narrative concerns recently, which also tilts the scales to have a bullish leaning bias. So as a result, if we do get some dips, I will still be looking for some short puts to sell some short puts on my favorite company using the wheel strategy. Of course, not on everything, on my favorite companies at defined prices, which I'll take you through later in the video. But I'm pretty sure you guys probably know by now, especially if you watch the top 5 options video on Sunday. And I've also been paying attention to my rundown of this big tech list as I've been doing it over the past 2 weeks. You guys should probably know the levels that I'll be targeting on a lot of those names if I'm playing them all together, right? and we'll just be looking maybe for a higher low. We'll take this one day at a time, but that would be a likely scenario in my opinion. Moving on to the QQQs right now, the Qs pushing higher and higher and higher, not looking too bad overall, and as a result, guys, daily downtrend right here on the Qs overall. If you take a look, I mean, that chart is quite bumpy, but the futures chart shows it best, right? They never really set a daily higher low. In my opinion, this is still one single move higher overall. We never really lost the hourly uptrend in your regular trading hours. As you can clearly see, no loss of the hourly uptrend. If you lose the hourly uptrend, then they're going to go set a daily higher low. But this is not a daily higher low. It's a bit of a faker candle, an imposter. Moving on, beautiful rally, right? We got a lot of space off these lows to set up for a daily higher low, and support below us is 613 down to 605. If we pull back into there, once again, I will be looking for some of my favorite actionable companies to play the wheel strategy on, and maybe even to further pick up some of my shares that I'm looking to build in my long-term portfolio. Moving on to financials right now, financials already embarking on their own version of daily consolidation, pulling back into the EMAs right here, rejection from resistance, 53.30 down to 52.89. Let's just call it, right? Tons of space off the lows, anything above 51.12, looking for a new daily higher low for possible a trend change to the bulls right here. We are still at the confines of weekly just chop, right? This is a massive chop here, big area. Well, not a big area, a small area, but an extended range of consolidation, right? Support below stays put at 52, down about $50. And the clearest time frame for me on financials is the monthly. We are still searching for the ever elusive monthly higher lows for possible further uptrend continuation right here. Financials are looking pretty good into 2026, into a rate cutting environment, and also into a quantitative tightening ending yesterday environment. Both very good liquidity events for the markets overall, but also both very favorable for the financial segment. You guys know which ones I'm targeting, man. I don't have to tell you guys again, probably, but still Visa, right? Visa, MasterCard. I mean, it's been a long time, guys, and we've been doing these videos for a while. It's been a very long time that you've been able to find Visa at a forward mid-20s multiple. This doesn't usually happen. Visa usually trades in the 30s, and people say it's too rich. Well, now it's not too rich, is it, right? 3.34% free cash flow yield as well. MasterCard, same concept. It's been consolidating here for a year. And what happens when a company consolidates largely sideways for a year while improving sequential and overall earnings? You end up with very low forward multiples. MasterCard now under a 30 forward price to earnings and a 3.3% free cash flow yield. You do not find these type of deals very often. I'll remind you also, another company I'm building more and more shares into is SPGI, one company I've held in my long-term portfolio for a very long time, also offering a very good level of support down here, 485 down about 462. And at 490, where we stand right now, guys, SPGI as well. People used to criticize this one for being too expensive, but this entire time they've been improving sequential and year-over-year earnings, and they will be doing even better next year. At 490, you're currently trading at a 24.7 forward PE multiple and a 3.62% free cash flow yield. This does not usually happen on this high quality of a business. So there are some good deals in financials. You just got to know where to look. Moving on to healthcare right now. Healthcare down about 0.6%, but we've been talking about this, right? As healthcare moved into your recent all-time highs, we were starting to get a little bit overbought. Weekly was clipping into daily overbought or weekly overbought conditions. The daily was definitely overbought conditions, and now you get a bit of a pullback. Higher lows are right here, 151. Anything above that looking still for a higher low for further possible trend expansion. However, you pull back too much and you open the door for a daily downtrend. You guys know the drill. Healthy weekly consolidation and tons of space for the bulls. Anything above 143, looking for weekly higher lows, possibly down into here under the 150 range, maybe back into our previous resistance area. Resistance, which could now be support. EMAs are down there as well. I don't know if they're going to come for such a rapid or rather steep pullback, but it could be quite interesting for some further positions, especially considering that this would be a very beautiful extended monthly cup and handle, yeah? Could be a nice another buying opportunity for healthcare if it does pull back into that region. Moving on into semiconductors right now. Semiconductors up 1.83% as most of that sector was indeed quite bullish today. You can see some nice performance here by the bottom half. Not so much Broadcom, AMD, and Micron, but NVIDIA and some of the lower names right here, and even some of the equipment and materials companies performing very well today. And they do have a substantial weight within this ETF overall, which is why you were indeed higher. Daily downtrend has now been upended by the bulls, and we're still eventually hunting for a daily higher low. So if you get any weakness in the market, you guys know the drill, right? Down here, support 344 down to about 327, a ton of space off the lows right here for a higher low, for a possible daily uptrend shift back to the bulls, and possible further weekly continuation, right? If we go through a bit of a weekly consolidation phase, it would be a small one. The weekly lows are probably set for now, and we're just looking to expand a little bit more now that we've cooled down the weekly RSI and that even the monthly, right? We were able to establish a bit of a monthly higher low into the lows of November overall. So I won't be playing every single one of these semiconductor names in this ETF, but I will be playing calculated ones, which I've been bringing up on the channel, namely AMD and NVIDIA, if you want me to spoil the punch right there. And I'll show you guys what I'll do with those ones leading into the end of the video when we cover them individually. Moving on to the Russell right now, down 0.18%. The Russell already embarking into its daily consolidation phase, a daily downtrend similar to many other ETFs in the market we just went through. And now they might just be looking for the good old breakout and retest, yeah? 240 down to about 237 is the support range. The EMAs are above those. So I would maybe be for something like this. Pullback if we get any bad data. If we get really good data, then obviously it's off to the races immediately, right? But you do have to set up some higher lows, no matter where they are, to change the trend and get the weekly lows set once and for all. And then only then can we talk about possible further expansion. There was a beautiful backtest on the Russell. I'm not necessarily playing the Russell as an ETF specifically, but I am playing certain individual small cap names. Maybe if you guys are lucky, I'll show them to you. My Discord members know which ones I'm playing, but I haven't really talked about them too much on the channel because small caps come with risk. And I know what people do is sometimes when I give the big companies, they say like, oh, well, I don't want to only make 20, 30% on Amazon. I want to go for the plays, the small cap plays that make 2, 3, 4, 5, 6x and just do it with my entire portfolio. I know, but I kind of got to manage expectations on the channel. So forgive me for holding back on those. Moving on a little bit further, XLP right now, consumer defensives. So not too bad of a day on defensives, right? Just a back test here. Big support, 78 down to about 75. Looking for further expansion overall into resistance, 80 down to about 79. We were talking about this one at the lows, saying it was a very good opportunity. Very rare that you find XLP into daily oversold conditions, but history is always a good indication of whether or not it's a good buying opportunity when you get oversold. And traditionally, when this entire ETF gets into daily oversold conditions, it is a pretty decent opportunity. So if you guys are able to pick that up, congrats. If not, it's fine. It looks pretty good heading into maybe 2026. It's just been a big old range of consolidation. Top of 2021, 2022. Defensives have been nowhere to be seen all year, and even more than a year, guys. Call it like a year and a half at this point. But I do believe that there could be a possible resurgence here into 2026. But of course, this is a no recession trade, of which there are many in the market. Well, obviously, if you get a recession, everything's going to go under, but especially consumers, right? The consumer trade, both from staples and discretionary, has been a very challenging one, arguably for the last year and a half. You've seen it in some of the discretionary names, Nike, Lululemon, Chipotle, so many different things from apparel to anything electronics, to anything food and, outing related, right? Just experiences, except for travel. Travel's been doing pretty good, but consumer facing stocks have just not been a very easy trade, right? Now, the true test is going to be into 2026. Can we get out of this K-shaped economy with the $4 trillion in possible tax cuts that are coming, and also the rate cuts that are coming as well, right? If so, then these trades are probably going to be better than they have been in the past year and a half. But so far, a lot of the gains have been made in AI and tech overall. I do expect that to continue, but these are the X factor trades, right? I'm not saying to fully position into these, but a little bit of exposure coming into 2026 just to go for that risk to reward trade. Not a bad proposition, and you can even see it here in XRT, which is your consumer retail trade. Not too bad, right? Nice pop off the lows, right? Making quick work of this big consolidation phase. You got a nice weekly bounce as well, trying to slowly undo this weekly downtrend on the monthly as well, right? Nice breakout retest. And this is like a year and a half, guys, like a year and a half worth of price action, right? Maybe, just maybe, looking to push a little bit further. So if you don't want to individually pick between consumer discretionary companies, right? Maybe XRT could be something that you'd be interested, because XLY, which is the other one, right? This one is largely just Amazon and Tesla. So it's kind of like cheating, right? You don't really get exposure that much to the rest of the consumer discretionary trade, but it's up to you, whichever one you want to choose. Moving on to utilities right now. Utilities with a bit of a consolidation lag. They had a nice run recently, but unwinding everything. Unfortunately, no change of the uptrend. That's why I say a bounce is nice, even an engulfing bounce. If you don't change the trend, though, a bounce is only a bounce until you confirm the trend change. That being said, if you do break a little bit lower, no problem at all. You can clearly see what's going on here, right? They're going possibly for monthly consolidation. A little bit more might offer up some very good deals in the utilities market, such as VST, such as maybe names like Duke Energy, such as names maybe like Next Era Energy, right? Such as names, this is not a utilities play, but associated with utilities, right? GE Vernova as well, right? So a lot of these bigger utilities players, especially the ones that are focused on powering the data centers, right, could be interesting into 2026. And now lastly, moving on to real estate, the sector that is just being challenged by yields every single day. This one is still doing a whole lot of absolutely nothing. Sure, you have some recent momentum in some of the mortgage companies like Rocket Mortgage, which I like a lot moving into 2026 all the way. But even the home builders, right? The home builders are just not getting the sustained lift. Now, it's beautiful on the monthly time frame right here, but it will be a little bit choppy until we get more information, of course, on the rate cuts, December, January, and then into 2026 as well. So real estate's still a bit of a challenging trade. That and consumer defensives and consumer discretionary, anything having to do with interest rates and the status of the consumer, obviously, because those are some of the concerns that we have in the market right now. Moving on to the VIX. Well, the VIX, we have a couple of volatility events, so I won't count this one down and out just yet, but you guys know the drill. When the VIX pops up a little bit higher here, if we have any volatility catalysts that enter the chat, you guys know the drill, right? When the VIX pops up higher, you just get phenomenal entry prices on some short puts, on some phenomenal companies, right? So use the VIX to your advantage. It doesn't mean, like, I'll give you guys an example, right? In any given week on Amazon, if I'm looking to write short puts for 0.5%, which is my ROI target, well, on any given week when the VIX is low like this, I can probably only get 3% lower than Amazon's current share price. That's where I can write a put option for 0.5% ROI, yeah? Okay, so I'll give it to you with a chart, yeah? So if Amazon, with the VIX at 16, maybe I can only write at this current stage like a 230 for Friday, right? Which is like a couple of percentage points away. It's not that far. When the VIX goes higher, and a lot of stocks drop in the process, right? I'm able to get way better than a 3% buffer between me and my strike price. I'm able to get 6-7% possibly, right? For 0.5% ROI. So when the VIX goes higher, you don't still play these super close and say, oh, wow, I'm getting so much more premium for the same distance. No. You widen the strike price to keep the chances of assignment the same, but you're getting a better deal for the same ROI. You're getting more distance, essentially, for the market to cover in the same amount of time. That's how you use the VIX, right? Too many times people get seduced when the VIX goes super high. They write put options way too close. They get assigned and then they don't know what to do, right? So don't let that be you. Moving on to the dollar right now. Why am I covering the dollar? Never mind. Moving on to yields. Moving on to yields right now. So we will see today's action, obviously, with the news about Kevin Hassett and stuff like that, right? Reverse a bit of the movement on the yields. You can see right now in the after-hour session, right, the beginning of the Wednesday candle, where we're down a little bit. We'll see what happens. It's largely going to move with the jobs reports tomorrow. If the jobs reports are weak, well, you can expect these 10 and 20-year-olds to fall a little bit, and you can possibly expect a bit of a rally on the bonds. I know this trade has been super slow, super aggravating, obviously, for some as well, but we're finally coming into the actual rate cutting cycle where we might be able to line up back-to-back rate cuts and stuff like that. If Kevin Hassett is nominated, which Trump said he would do at the end of the month, well, he didn't say he would be nominated, but he would say he would give the nomination at the early portion, in the early parts of 2026. We could assume, knowing President Trump, he's probably going to do it January the 1st, but we will see, right? I know this one's been a very slow and complex trade. It's very normal. So anybody in bonds, I feel for you, right? But we might just be having a better 2026 than we did have a 2025 period just because of rates coming down overall. Moving on to gold right now. So gold also not too bad, all things considered. Yeah, gold had a bit of a down day, but now in the after hours, we are pumping up a little bit. There's just been this kind of sustained, but very slow and methodical daily uptrend, right? Nothing reminiscent of what we had here with this velocity. No, just very slow and sustained type of uptrend where if you're in, it's good, but you might be getting a little bit impatient, especially if you got used to this price action on gold. This price action on gold, guys, okay, rarely ever happens, yeah? Usually gold moves exactly like this. So if you got used to the gains on gold recently, and now you're finding it's moving a bit slow, and as a result, you're moving into other trades such as silver, such as palladium, right? A lot of people moving into silver, moving into palladium because they move faster. I mean, it's up to you, right? But a lot of these commodities now are kind of normalized in terms of price action. Gold looking good, though, still a very healthy daily uptrend and still looking into a weekly expansion phase. Your next target for this weekly expansion phase is indeed the all-time high area around 44 and then 4,500 psychological. But right now, the bulls do remain in full control. Just remind yourselves that in the event you did enter the trades with us all the way down here, please put your stop loss at break even, right? because the last thing you want is get unwound by either a big chop zone like this or a weekly downtrend, which would cascade you into a bit more monthly consolidation, understanding that we are quite extended here on the long-term time frame. So we can stay in the short-term trades as long as they're favorable, but don't round trip gains, right? Just set a stop loss at break even now that we're in a profitable position. And now moving on to Bitcoin. So Bitcoin trying to go for it. We had a very brutal day yesterday. At Bitcoin today, moving higher. The JP Morgan headline helped a lot. This one to be specific, or sorry, it wasn't JP Morgan this time. It was Bank of America. This one helped a little bit, obviously, right? So that being said, you're looking for the daily uptrend sweep. I don't know if they're going to break it. 93,000 is the equal highs right now. They're looking good in the post session, or well, Bitcoin doesn't really close. So they're looking good for the daily uptrend breakout. We will see if that is the case. That would be the first time we have a daily uptrend since the end of the month of October. It's been a while, right? But this would be notable to us because it would symbolize possibly the end of the weekly momentum to the downside. And then, well, then they have to sustain this daily uptrend at least high enough that the bounce size on the weekly is respectable, right? You would want to see at least a 50% bounce on the weekly. So if that daily uptrend, if it happens, can bring us up into this area here, 100,000, then you have a good chance of reversing the weekly time frame. And as a result, you might have a good chance of also this being the monthly lows. Until the time that all three things are met, you can't really say, yeah, that's the bottom and I'm going all in. No, what you can do now that they're breaking out of the daily uptrend though, is we do have an ability to take a swing trade. Now that we have a tradable local bottom of a daily uptrend attempt, stop loss goes down below there, and then you're targeting the most recent weekly, right? The most recent leg of selling that just started right there. Call it about the $108,000 level, which is right about there. That's not too bad, right? Because what you're going for is you're going for the weekly upswing into resistance. So target's probably like the mid 100s with the stop loss below there. That's how you would structure a short-term swing trade after being patient and waiting for the daily uptrend confirmation. Moving on to Ethereum, same concept, right? Ethereum, we know it's been down, 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 down. Monthly, huge retracement size into support right now, 3,300 down to about 2,800. The weekly has been a big old weekly downtrend as well. And the daily has also been a big old daily downtrend. So step number one is reversing the daily into an uptrend, break above 3,100, and you have a confirmed daily uptrend and a tradable local bottom. At that point, the entry would be here, the stop loss would be there, and first profit target would be all the way up there on Ethereum. That's for a short-term swing trade now that you have established a daily uptrend. And as a result, you would look for that daily uptrend to persist at least as high, right? If we can get a bit of a bounce going here on the weekly, at least as high as a 50% retracement. I mean, at least give me a 50% bounce. Because if that's not the case, guys, and they take the daily uptrend into only here, a 38.2, which is a very soft bounce on the weekly, right? And then they unwind like this, it's not looking too good, right? You just might be heading for another equal test of the lows or one leg lower. That's why you have to have a very good bounce size on any time frame that you're looking at. But you notice the inter-time frame analysis that I'm doing. I get it. If it's your first time seeing it, it's not hard. It's very hard to understand. If you're experienced, you know exactly what I'm talking about. It would take me an hour, 2 hours, 3 hours to explain inter-time frame analysis from the bottom to the top. But hopefully, as I'm showing you this, video after video after video on Bitcoin, Ethereum, the indexes, and big tech, that you start getting a sense of, oh, that's what he meant by saying watch for the size of the bounce, wait for the daily uptrend to convert into a weekly upswing, and then look at the size of the weekly, and then we have confirmation that maybe the monthly lows are set, and then maybe we can go for the big old expansion trade, right? That's how you do it rather than just perpetually guessing, is this the bottom? Is this the bottom? Is this the bottom? Is this the bottom? That's not very consistent, nor is it replicable, is it, guys? Moving on to our big tech name, shall we? So taking a first look at Apple, I'll run through this list relatively quickly because we've really beaten the heck out of this entire list in the past 2 weeks. You guys probably know my stance on all this stuff. Apple, brand new all-time highs. Daily uptrend is definitely in motion right now. Any pullback looking for a higher low, maybe targeting this region right here, 275 with the daily 12 EMA that we haven't really lost in a while here. The higher lows are 265, looking for a higher low on any pullback for further uptrend continuation. But be mindful, daily overbought conditions. Weekly also into weekly overbought conditions. This is a very greedy long up here, so I'm not a fan. If you get a pullback on the daily and weekly timeframes, your higher lows are at the same location. It's been a very beautiful weekly uptrend so far, but squeezing extra juice out of this trade, guys, may not be a very favorable risk-reward proposition. That being said, the fundamentals of the company are also slightly a bit rich right now. We're trading well into the 30s price to earnings, above a 3 peg, so you're not really getting a good deal. I do agree that Apple will probably have a very good Q4, and I am holding all of my Apple shares that I have, but I'm not adding any more up here, nor am I selling because I plan to keep them for the next 5-10 years. Moving on to AMD right now, AMD down 2.06% after the Amazon and NVIDIA partnership. AMD was green and then it went red, I guess, for some odd reason because they assume that AMD won't be making any money, I assume, even though Lisa Su gave us phenomenal earnings back here and then reiterated those earnings with even better guidance just a week later. But people are very easy to forget, right? What the thesis for AMD is. Thesis for AMD is massive EPS expansion into the next few years and massive revenue expansion as well. That being said, right now, AMD is sitting at a quite attractive level. If we get any further weakness, of course, I will be selling some put options down here, 190 down to 180, which is the next support area. And the 12-month EMA is currently curling in to that area. This is a very nice monthly retracement on AMD. I know it's been very bumpy. I know it tests your conviction, but always remember the fundamental thesis if you're in this stock. Short-term price action, obviously, daily uptrend looking for a higher low, anything above 195, trying to maintain this daily uptrend. Even if you don't keep it, though, and you go into another weekly leg down, probably the final resting place of AMD, filling a bit more of that gap. That being said, in or around the 200 location is a nice opportunity, in my opinion, if you do believe in this thesis, to be picking up possibly some additional shares as they are trading at a relatively fair valuation down there in the lower 200s in relation to the growth that they will be having through 2028. Moving on to Amazon right now, Amazon up 0.23%, couldn't keep it up off of its own bullish news, which was just hilarious to me, but it is what it is. Daily, still in a downtrend, nice size bounce though. This is a very juicy bounce, guys, right? From the top to the bottom, this is an over 618 bounce. The bull's creating a ton of space between us and these lows down here at 215. So any weakness on Amazon out of this resistance range, 240 down to 230. If they can't break through this and we pull back a little bit, I will definitely be selling some put options down here on this stock, one of my favorite companies in the market right now. Huge consolidation area on the weekly, just lack of overall trend direction. I mean, you want to say that it's still a weekly uptrend, but when the bears pull back so much of the move, maybe they have to do it in a couple different stages, right? We will see, obviously, but one thing's for sure, 220 area is where I want to be playing on the wheel because you got a lot of support down here and the 12-month EMA and the valuation down there is quite attractive. So I'll be playing this one for the wheel. Leap call options are definitely a decent proposition down there too. Not financial advice, just what I'm doing. And additionally, long-term portfolio shares, I wouldn't mind picking up a few more of those down there too. On to Google right now. Google up 0.29%, but, you know, last 5 days for Google, not that advantageous. They were very overbought conditions. They're cooling it off a little bit. Weekly was very overbought conditions too, and we still are very weekly overbought. I don't think anybody would be surprised if after such crazy runs, Google has a bit of a consolidation phase, right? That being said, we're looking for a higher low, anything above 270, looking for a daily higher low, maybe for further trend expansion. If we can't do it and pull back too much, you guys know it might open up the door for a daily downtrend, and as a result, might open up the door for a bit of very healthy, keyword healthy, weekly consolidation, maybe back into the 12 EMA respectively as well. At 320, am I buying any more Google shares? No, right? Technicals are not very favorable for me to throw any more money at this one. Even for the long term, right? I need it to come down a little bit. I need the technicals to cool down a little bit too. And also for any short-term swing trades, guys, buying Google up here, short-term call options, right? Even leaps, guys, it's a very greedy trade. I'm not saying it's not going to work. I'm just saying it's super, super greedy. So I hope your position size reflects that. Now, moving into good old Meta. Meta up about 1% today. Not too bad of a day for good old Meta, bouncing significantly off these lows right now. This was a nice daily downtrend into oversold conditions. It was usually a good proposition to be buying Meta into oversold conditions if you just looked at the history and found it during tariffs, found it during the bear market of 2022. Usually, that tends to mark some form of a local bottom. It doesn't mean that we can't just trend lower, but at least you know a bounce is coming, and then you measure the size of the bounce. Take a look at this, over a 100% engulfing bounce, and the bounce is continuing right now. Still, the bull's not taking a breather to reset the daily uptrend just yet. The further they go, the better the odds of getting a nice daily uptrend, and the better the odds as well of maybe even reversing some of the damage of this weekly, right? So we'd like to see them pull up into here, 680 up to about 700, because if they do that, that's a lot of work, man. That would be a nice 50 to 618% bounce, which is very solid, and it would give the bulls a nice chance to reverse these weekly timeframes and give us a better indication that yes, indeed, the monthly lows on Meta are probably set. That being said, what am I doing on Meta right now? Well, if we come down a little bit lower, yes, I wouldn't mind selling some put options. I know it's very heavy, but I know some of you guys have big accounts up there and you are very bullish on Meta. So that would be a revisit area for me to sell some put options. And even here around 647, if I'm DCAing, right, with just cash that I inject in my portfolio with paychecks or on a monthly basis, right? If I had some cash, would I still be buying Meta even if we're not at the lows? Yeah, absolutely, because it was a good valuation down here, but it still is a good valuation up here as well. Very low multiple right now on this stock, a 421 PE, and a very decent PEG ratio as well. Moving on to Microsoft right now. Microsoft, 0.67% to the upside. Let me just refresh this page. And moving into resistance is Microsoft, right? 500 down to about 489. Now, keeping in mind that this was a big old daily downtrend, the bulls have a nice bounce, but we're coming into resistance. What is the size of the bounce on Microsoft right now? It's not too bad. It's a 50% bounce, so it gives the bulls a good chance of setting a new higher low, possibly to attack this resistance range again. That's if we come down from here. Obviously, best case scenario is just engulf the entire resistance range, get back above here, and then sit on it. That would obviously be very fun. But if they don't, and we come a little bit lower, yes, I will be selling more puts on Microsoft down here in my little golden pocket area, which is slightly below the 12 EMA and possibly closer to our support range. 454 down to about 428. Huge area, tested a bunch of times in 2024. That being said, Microsoft looking pretty good for this consolidation phase. Tons of opportunities to add some shares to the long-term portfolio because now around 470 or where it was, right? We're very close to a 34 price to earnings and a 1.7 PEG, which is a lot more manageable than when we were trading all the way up here. So I do want to make the most of this good old monthly consolidation phase on this stock before it might embark on a very beautiful 2026, as was their guidance during the last earnings call. Moving on to Netflix right now. So Netflix also nice bounce continuation, right? Netflix was down 1% today and reversed almost all of it. So daily downtrend, nice bounce underway right now in terms of the size of the bounce. We are at a 50% bounce, which gives the bulls a lot of space to, if they do get rejected here at the EMAs or a little bit higher at resistance, 110 up to 116, well, you know, the bulls have a lot of space to maybe reset into a daily uptrend and further attack this range. Any weakness on Netflix, guys, I will be selling some put options down here, lower 100s, because you guys know we've been talking about it on the channel a lot recently, right? 12 EMA all the way down to this pocket of support, 100 down to about 95. This is the area where I want to be targeting for a few different things. Short puts, yes. As of right now, I'm building a leap position, but we'll further build my leap position if we fall into that area. And also, I am currently still building my share position, right? Because the valuation right now is a lot more manageable at a low 30s multiple, a 1.6 PEG. So from here down into the lower 100s, call it high 90s as well, is the pocket in which I'm looking to build a bit more of everything. Moving on to NVIDIA right now. NVIDIA up 0.86%, but they were up almost 3% today. Still no MACD momentum cross for good old NVIDIA. Still kind of trapped in this overall bearish sentiment, this whole GPUs versus TPUs, et cetera, et cetera, et cetera. So big chop zone for NVIDIA right now. They're trying to reclaim this area, 185 to 178. But we just can't break out. It held the bulls back for a while. We came out of it. We sat on it, right? Then there was GTC. We sat on it a few more times. And now it's kind of acting as slight resistance again. That being said, NVIDIA, not looking too bad, right? Although we have lost the weekly uptrend, it's weekly consolidation, but not a downtrend. Downtrend is this, like Meta, right? Or like Netflix. It's just monthly consolidation too. So I do want to be taking advantage of these discounts on NVIDIA by selling some put options here. The 12 EMA is curling up, right? So selling some put options down here, 170 and under. I'm a big fan. I'm doing that. Also building some shares and also even building a bit of a leap call position on NVIDIA for 2027, deep 2027, as I do enjoy these valuations right here at 180 or trading at a mid 20s multiple, which is very fair for NVIDIA and a 1.15 PEG. Moving on to good old Tesla right now. Tesla using using support as best as it can. 427 down to about 415 is the good old support range right here. Daily uptrend, using support, using the EMAs, right? So we'll see if Tesla can kind of sustain this level. If not, they do have a lot of space here. Anything above 384, looking for a daily higher low, possibly to continue this expansion phase on Tesla. The weekly time frame as well was lost. The bulls, a nice bounce. This is what I mean by saying a nice bounce, right? On the weekly, 50% bounce, meaning if you lose this daily uptrend right here, you got a lot of space between us and these lows to set a new higher low and go for the weekly trend change deeper into bigger support, 405, 384. If you pull back down there, I know some of you guys are interested in selling some puts. I would probably only do so under the support range. Monthly, Tesla still looks pretty good for a breakout, guys. This is a good old breakout retest, right? If I've ever seen one on a monthly time frame. So any further back tests of this location, if you are bullish on Tesla and going for the expansion trade, I'm not saying to go all in, but it's not bad, provided we keep a stop loss below the support range, and you're just going for that monthly expansion phase for this company. Moving on to Palantir right now. Palantir was actually up 4.5% today, but resistance was strong. Came into the EMAs and into resistance, 185, then about 170. So the bulls are going to have a big battle with this resistance range, but daily downtrend, nice engulfing move. Now they have a lot of space. So if we get tired here and we can't do it, any move lower, they'll be looking to set up a daily higher low and possibly change the trend, right? Daily MACD is also looking like it wants to cross right here. That being said, on Palantir, I'm not really taking any action right now, but if you do make a bit of a swing lower here and come back down 140, 150, this is an area that I might want to position in either with some swing trades for some shares or possibly call debit spreads or things of that nature as we just look to consolidate this monthly time frame. I know, I'm the first person to raise the red flag in terms of valuation, of course, right? But the price action is one thing. The valuation is something else. If we're just looking for swing trades with a defined stop loss below an area, then we can kind of play the price action, right? Am I adding any Palantir shares to the long-term portfolio up here? No, because I bought my Palantir shares a very long time ago, but I wouldn't blame people if they have a, 5+ year time horizon, if you're trying to benefit from some of these declines and you see a bit more down here into the 150 range, etc. I mean, if you have a long-term thesis and you expect Palantir to grow into these valuations, I'm not forcing it down your throat. You're free to believe what you believe, but you do have a long-term thesis, right? That it's going to be a $1 trillion company, etc. Well, down here is not the worst nibble opportunity in my mind. Moving on to SOFI right now. SOFI up 1.65%, but additionally resistance strong, right? Resistance, support, and now sadly resistance again for this company. 30 down about $28. If SOFI also comes down from these local highs, well, you're looking for a daily higher low, anything above 23.5, let's call it, looking for a daily higher low. They got a lot of space here, right? And if we do pull back, I will once again be doing what I've been doing on this stock for literally the past 3 months, which is selling put options down here 25 to 22. SOFI usually has great premiums. The weekly is just a massive chop zone, so we'll see what happens. The monthly as well, right? We got a nice monthly pullback, but it didn't consolidate more than that. Just gave us a one-shot candle down there and then closed the month of November strong. So any further weakness on SOFI could be interpreted as another buying opportunity, especially as we move closer to the previous resistance range, which is support, the 12-month EMA finally curling in to the support range overall. So I like this area, this little pocket, call it like 27 down to 22 to maybe build some further longer-term position trades, right, in SOFI overall, as 27 or less presents a good buying opportunity of 1.1 peg and a mid-sevens price to sales. Moving on to the two last ones now, Uber and TSM. So Uber also making nice push today, but sadly couldn't keep it up. Resistance strong on a lot of these names, right? So 91.5 down to about 87 is the big resistance range that we're moving into. You can see the bulls struggled with it at first, claimed it, used it as support. I don't know, God knows how many times, right? Several times. And now, unfortunately, as resistance in the context of this weekly downtrend. Now, that being said, Uber down here is a couple different things. Number one, it is a good buying opportunity for a long-term portfolio, provided that you believe in Uber's thesis, that they will not be disrupted by robo-taxis long-term, that they still have very large network effects, that obviously they will probably work in a parallel situation in terms of with autonomous vehicles rather than just getting completely disrupted by them. But it's completely up to you. I will be adding Uber down here around the low 80s. The valuation is supportive of that. And additionally, in terms of the price action, although we have no daily uptrends right now, any further weakness, I will gladly sell some put options down here into big previous resistance, which is currently support, low 80s into high 70s. I think that's a pretty good discount for Uber, and just looking for a bit of monthly consolidation, maybe before a 2026 nice leg of expansion. And now lastly, good old TSM. So TSM, very choppy overall. They're trying to go for the daily uptrend. We'll see if they actually get it or if we pull back because of some news tomorrow. But nice reaction from support down here, 280 down to about 270 is the reaction zone. I know it's been very choppy with tons of gaps here and there. Overall, though, TSM trying to go for the weekly or the daily uptrend breakout, which would put an end to this weekly leg of selling and maybe even allow the bulls to start challenging the weekly all-time highs, right? The weekly doesn't look too bad, but still need the confirmation of the daily uptrend because this is just equal highs, so not just there yet. Reclaiming the moving averages, though, a little bit. And monthly, it never really pulled back enough for my liking. I was hoping to get some short put contracts down here and or add a little bit more shares on TSM if we got that full pullback. They didn't give us the full pullback, so it is what it is. I'm perfectly fine holding all the shares of TSM. that I've bought over all previous years, right? I just wait for nice pullbacks on this company. Whenever they treat me with a 12 EMA pullback into a solid valuation, I will participate. And if not, I'll just add to other names. And I'll just keep this one on the back burner type of thing, right? Around 290 where they are right now, forward valuation is not too bad. Really not too bad. It's not rich, right? Forward 29 price to earnings and a 1.7 peg. Not cheap, but also arguably not extremely overvalued. So I'm just holding what I have. I'm not buying any more up here, but I'm also not selling any shares up there either. That's everything for your overall market rundown. Hopefully you enjoyed. Now, let's dive into the good stuff, the juicy stuff, the good old biggest gainers and losers of the day. And I want to start off this section with a bit of a discussion that I was having in the Discord today. Well, I'll start off the discussion with two things. Number one, if you haven't seen my buy list of 20 companies, both core positions and growth names that I'm looking to build positions into, have a look at this video right here on my channel. Opportunities everywhere, what I'm buying now. At the end of the video, in the biggest gainers and losers section, I go over 20 of my favorite companies I'll be adding into throughout this period of overall market weakness. That's not what I wanted to talk about though, guys. I'll give you guys a bit of a little bit of an update here in terms of where we stand. So you might notice a lot of names have been down significantly from their highs. And I said this when we started correcting early November, but I will reiterate it, right? The market is no longer in easy mode. Actually, right now, it's in hard mode again, right? Previously, you had very easy trades, very easy and arguably overcrowded trades, especially at the tail end of September and October, where a lot of people made a lot of money, but maybe you guys, not all you guys, but some guys have just round-tripped everything, right? Alclo, such an easy trade, round-tripped everything. SMR, an easy trade for a majority of this year, round-tripped absolutely everything. Even some of your favorite quantum names, very easy trade. September and October, a lot of momentum. You could literally just click the buy button anywhere throughout this rally, and you'd probably be rewarded. Everybody was talking about these names everywhere on social media, everywhere on YouTube. People were making videos about these names, and now it's very quiet, right? Rigetti, QBTS, a lot of the other quantum names forfeiting all those gains. Not only those easy trades, these easy trades as well. Iris Energy, NBIS, even to a certain extent, CoreWeave on this massive rally September through October. It doesn't look like much, but then again, bottom to top, guys, this was 82%, round tripping a lot of gains, if not everything. Other names like CIFR, which round tripped a good portion of gains, but have pumped recently. Names like EOSE, which were easy money, but have been challenging money recently. Names like Bloom Energy, which were easy money for a while and now are proving to be challenging money. Names like Robinhood, which were easy money for a long time and now proving to be challenging money. Names like Palantir, which were easy money for a long time, which are now proving to be challenging money. What's the common theme? They were very easy and now they're not easy anymore, right? Now people are finally starting to look at this and starting to ask themselves some questions like, hey, did we overdo it? Is this the end of the AI rally? Are all these names, did I just miss a generational buying opportunity to participate in all these names? And now that's it? I'm cooked forever? I missed it, and now these names are done? They're just done, right? They go from being super bullish to now just completely cooked. Almost seemingly overnight, or at least in the last month of trading, right? Now is when, right, when the market is not easy anymore and you can just buy things regardless of the valuation. You don't pay attention to the fundamentals. All you're chasing is momentum and other people's gains, other people's theses, right? No, now it's hard. Now you have to come up with your own thesis. You have to look back on what happened and say, did we overdo it? Do the valuations still make sense? What company I'm even invested in? Do these companies even have any revenues? When are the revenues actually coming, right? Now you got to ask yourself a lot of questions that probably you weren't asking yourself in the past, and it's completely normal. Now the market will reward people for having conviction, for buying dips from companies that are down 30, 40% from the highs. Now only people with conviction are left. A lot of the momentum traders are out. They're trying to protect their year-to-date gains. Of course, who wouldn't want to protect their beautiful year-to-date gains, right? And possibly people are looking for the next new narrative. Well, it can't be gold anymore. Gold was also a very easy trade. And now it hasn't really been such an easy trade, has it, right? So many of the easy trades are now gone. Now you actually have to drive a thesis. You have to double check the fundamentals, right? You have to check whether you're actually in a sustained monthly uptrend, weekly uptrend, daily downtrend. You don't know where the price is actually going to stop on some of these. I get it, guys, right? But now is the time to build conviction in some of these names. Do the extra research, take the extra steps, right? And plan for some levels that you will buy at regardless of what the ongoing sentiment is. Focus on the long-term fundamentals, focus on your conviction, and build a thesis for these companies, especially if you're looking to buy them for the long terms, right? Or no, or even for the next 1 to 3 years. Rocket Lab, super easy trade, unwound absolutely everything. What has changed with these companies? Have they lost all of their revenues overnight? Well, I can't talk about Quantum or some of the other names because they never had any revenue to begin with, but I digress, right? A lot of these companies, have they lost the revenue pipelines? The answer for a lot of them is no, right? What has changed? The only thing that's changed is sentiment and momentum. So please spend some time to derive your investment thesis and the price that you are willing to pay for something when these names come down, right? This market will test your conviction and will test your thesis overall. The easy money is gone, at least for now, right? And the people that will be rewarded are people who can hold these bags through the next phase of expansion, which will come from actual fundamental expansion that's been here. But a lot of these narratives, guys, we're pricing in growth, huge growth from the end of 2026, 2027, and 2028. That growth hasn't happened yet. Now you have to kind of rely on these companies performing during earnings, right? So keep that in mind moving forward, guys. The easy momentum is gone for now. It's not disappeared. We'll probably get another stint of this into 2026, of course, as well as we move into fundamental territory for a lot of these companies, right? But that being said, right, focus on the thesis. So Symbotic went up 80% in a single week here, and now it's down 20% today. Why? Because one of the directors sold 9,000 shares. A very small position, of course, but still, any negative news headline is taking these companies down a ton. Symbotic, if you want to know where I'm interested in this stock, it's been the same area that I've always stayed on the channel. Mid-50s, very strong company overall. The growth metrics for this company are substantial. The problem with this company is that it runs very heavy on momentum sometimes. EPS, nicely expanding in the future. Revenue, really expanding hard into the future. But we were trading at very rich multiples. So if you do get a pullback on this great robotics company, I will maybe be looking to take a position either for some short puts down here or possibly even for some shares if you do revisit that area that we were literally just at a few short weeks ago. Iris Energy putting out some dilution news today. Has their fundamental thesis that they just reported a few weeks ago during earnings, has any of that changed? No. What has changed? The stock price. That's the only thing that's changed. But oftentimes, when the stock drops so much, people think the thesis is absolutely dead. No, as I've been saying, derive a potential range of prices in which you would not mind to pick up this stock for some shares for the expansion of the actual fundamental aspect of the business. For me on Iris Energy, that's between 40 and 30 bucks, all the way down to this good old 200-day MA, which is casually the monthly 12. When we're all the way up here, people never think we'll pull back to the ever so elusive 12 EMAs. But in my, almost 15 years trading the markets right now, these monthly EMAs, they may delay the inevitable for a while, but eventually they always pull back into it, right? Whether that's fast or whether the EMA take a while to curl up and they just consolidate up here until we get a nice pullback into it, right? It always happens eventually, which is why when we get too far extended from some of this stuff, I tell myself, and I also try to tell you guys, to just be careful, right? So Iris Energy, I will be buying some shares, 40 down to 30. The same can be said about NBIS. NBIS, I will be building my share position as we move into possibly the 12 EMA off of any further weakness. But the short-term price action on this stuff, guys, is not easy. It's very choppy. The weekly bears are in control of this, right? And they also control the narrative right now because the narrative on AI is just not so clear as it possibly once was. Just look at a company like AAPL. AAPL was up 10% today before ending down 13. This was a big winner throughout June, all the way through roughly September, and then we unwound in a big fashion. But look where we are again. Oh, the good old 12 EMA, isn't it? So if AAPL is something that you're interested in, we'll possibly explore, build a thesis, build fundamental price targets. And if you guys don't know how to do that, just ask AI. Just go into Grok or Gemini or ChatGPT and say, hey, can you derive an investment thesis with some price targets for 2026, 2027, 2028? And what would be a relatively fair price to pay for that now? And you might be surprised, right? A lot of those levels could possibly coincide with some nice technical locations. CIFR is the exact same concept, right? Exact same concept, so I will not belabor the point overall. You guys probably get it by now. EOSE is the exact same concept. I'm not saying these companies and the battery storage companies are not good. They are, but this, another company that operates in Europe, such as FLNC, well, obviously this one pulled back a little bit, but FLNC, interesting bet, right? 17 maybe down to 15 type of thing. TMDX is one that I'm building. Has nothing to do with AI. This is just an organ. It's just an organ transportation business. I know, not a fancy business at all, right? But what they do have is very attractive fundamentals right here. Profit margins are expanding and expanding nicely. In terms of their EPS expansion rates, very good as well. Flipping from negative to positive. I always pay attention to this style of company when they flip negative to positive EPS. And additionally, revenue, look at this revenue growth rate, very solid. Some fun facts about TMDX is that they will be expanding into the largest organ transportation business on the planet, which is the kidney business. As of right now, they do heart, lungs, liver. So this one's looking very good. On the technicals, it's looking very good as well for possible monthly breakout continuation. But when I'm buying shares of TMDX, which I did, okay, I'm looking for a multi-year thesis. The thesis is they're expanding into one of the largest businesses for what they do. They've proven the business model. And additionally, they're applying for licenses to transpose their business from North America, where they've built their reputation, into Europe. So this company is still a very young company in terms of what they do. $5 billion market cap, right? Interesting play. I'm not forcing you guys to take it. I'm maybe just suggesting that you look into it a bit more and do your own research. Moving on a little bit further here, guys. I mean, there's tons of things to talk about, right? But we've talked about many of these things before. Elf Beauty, I'll be probably looking to position again if we do come down here into the lower 60 range, both for short puts and maybe more long-term shares. I like this one for the long-term thesis. Currently right now in the mid 70s, it's trading very low. We did the valuation at 92 right here. Just take 20% off this. It's like mid-teens and a very low PEG ratio and extremely low price to sales. This one as well, right? Consumer discretionary, but they have a good business model. They offer equal quality makeup products for a fraction of what their competition offers. And it's a brand that's very much loved by, social media users and the younger demographic. Think millennials, Gen Z, and possibly under as well, the budget conscious consumer right now, but they got crushed by tariffs. Just got crushed by tariffs. Their margins got crushed by tariffs over this entire year. Wall Street did not like their earnings, but I like where the company is going in the long term. So this one is an ad for me. Once again, this is a relatively small cap company at about $4 billion. HIMS as well could be an interesting play to maybe sell some put options. I know this one is a very polarizing company. I say it every single day, but their growth guidance is pretty good for 2030. And as a result, at about the $8 billion mark, I wouldn't mind taking a bit of a stab at this company. I know the daily uptrend is very bad right now. It's inexistent. The weekly downtrend is in full effect. Bearish momentum is in full effect, but start coming down to the low 30s, man. It becomes a decent risk reward trade if we're looking to hold this one into the next few years. Affirm, one of my favorite buy now, pay later trades, just because it is the one with the highest quality customer, in my opinion. Very strong user growth metrics. So as a result, Affirm, as we move into the low 60s, not a bad position if I'm looking to accumulate some BNPL positions here into possibly 2026, 2027, and beyond. This is a high quality company that I might be looking to build a bit of a share position and carry it into the next 12, 24, and beyond in terms of months, right? That's pretty much all the ones I want to cover and all the topics that I want to cover for the biggest losers of the day. Biggest gainers of the day, well, obviously there's the crypto names. These I'll leave completely up to you if you guys want to position in Tom Lee's BMNR and Michael Saylor's micro strategy, of course, if you want to try and pick the bottoms, as they say, or build some swing trade positions because you will have a bullish long-term thesis on MSTR and a bullish long-term thesis on Ethereum. I won't hold you back, right? But just know that these could be very bumpy trades. These move a lot with sentiment, right? They're like rubber bands. They don't move identical to Bitcoin and Ethereum. Arguably, they move more, right? So they are kind of like leveraged bets without employing actual leverage. They are leveraged bets versus a traditional ETF, right? Like an Ethereum ETF or a Bitcoin ETF, which literally just tracks the price of Bitcoin. No. These track not only the price of underlying assets, but also retail sentiment. So they are very low right now, arguably below what they should be worth, right? In the event that the thesis of expansion is maintained. So starting small positions here and just nibbling at them and building them out, not opposed to it. But once again, this is not for everybody overall. DoorDash rallied 5% today because one of the people on the board of directors bought $100 million in stock. Huge. Might just be looking for a nice little upswing here on DoorDash. If I had to do a swing trade on this one, tradable bottom right there for a bit of monthly. This is a longer dated trade, right? Stop loss would be down there because if not, you're going to invalidate too much of this monthly move. And then the take profit, of course, is all the way expansion into there. This will not happen overnight, and this stop loss will not happen overnight. This is a longer form positional trade just because these short-term timeframes are still quite choppy overall, and we haven't really confirmed them. Moving on further, Shopify, very good Black Friday sales metrics overall. Shopify for me is a buy down here. Short puts down here, 140 down to 120, let's call it. This is the pocket that I kind of want to operate in Shopify if we get any further weakness. If not, it's fine. I'll have what I have in Shopify, and that's going to be it. Booking.com, I've been kind of pounding the table on this one, especially down here at these lows. Very high quality company in my long-term portfolio, around 5,000 where it is right now, under 20 forward multiple, a 1.16 peg, and a beautiful free cash flow yield. They use a lot of that free cash flow to buy back shares. Just a very high quality company in a nice monthly higher low phase of the market price action right now. And travel has been very resilient, and Booking.com has had great earnings all throughout this entire calendar year so far. And I'm expecting that to continue into 2026. And I think, guys, that kind of covers it. Rocket Lab, this is another very interesting one, pulling down once again into the 12 EMA. We did the valuation here after their earnings on November the 10th. They will need that Neutron rocket to compete possibly with SpaceX into deep 2026. So if you're buying this one here, well, maybe the short-term momentum is finished, right? But now you got to count on the longer-term thesis. See the kind of commonalities between a lot of these things right here. Now you actually have to have conviction, not only momentum, but conviction, because momentum may take a while to come back. I'm not saying it's never coming back, but it may take a while, and this might not be the bottom. So if we're looking to accumulate, such as I am, for maybe this bet into the next few years, 40 down to roughly the $30 range is where I would be interested in building such a position. And I think that's everything. I mean, I talk about Mercado Libre every single video. It seems like, right? Mercado Libre is one of my favorite growth names in the entire market, guys. I don't think they're getting the attention that they deserve right now, just because of the tax implications from last earnings, kind of like Meta, kind of like Netflix. I digress. Around the $2,100 range. I mean, at 23, it was already cheap. Under a one peg, 3 forward price to sales, super cheap, very strong free cash flow yield. And the growth on Mercado Libre is actually explosive, right? Take a look here at their EPS. I mean, EPS speaks for itself over the next few years. Revenue speaks for itself as well. Sure, they've been reinvesting a lot of money into CapEx to grow both the fintech arm of the business and the e-commerce aspect of the business, which is why your free cash flow and earnings per share over the last few quarters has been kind of similar, not improving sequentially. But that's not a problem in my opinion. They're investing the money in a good place into a very fast-growing business, right? Reinvesting into themselves. And I guess we can take a look at Robinhood. Robinhood was the same concept down here. $100 range is exactly where I would kind of want to build some positions out, either by doing some short puts or just banking on the expansion into banking for Robinhood overall. Short selling will be added soon. Social trading, the acquisition of Bitstamp, banking, and the prediction markets are all things that people are looking forward to with Robinhood overall. Around the 110 region, the valuation finally got a little bit more manageable than it was all the way up here at 155. So that could be a nice area. And casually, that's also around the 12 EMA, so lower 100s would be where I would not mind shopping for a bit more Robinhood if that was something I was interested in. That is everything, guys, for today's video. Hopefully you enjoyed. If you did, consider dropping a like. You guys know the drill. Would really appreciate it if you drop a like for the growth of the channel. Also, consider subscribing if you're new. If you're new to the channel, welcome. I would appreciate it if you hit that subscribe button. We're almost at 11,000 subscribers, man. Very good growth on the channel, and it's thanks to all of you guys who find my videos and sit through me talking for an hour every single day. Hopefully I don't bore you too much. I know some guys, they don't like the long-term videos, but then again, they probably click away, but some of you guys that enjoy these long-term videos, or these longer version videos, I really appreciate you guys, man, for all the support so far. It's been a pleasure doing them for you. I always enjoy them. And last but not least, if you have any questions, always feel free to leave them down below in the comment section, and I'll do my best to get to them as soon as possible, guys. That's it for me. Take care. Have a good day in the markets tomorrow, and I'll see you guys after the close. And yes, tomorrow, I will be getting back to these earnings. Tomorrow, I'll cover a couple earnings for you guys, okay? So tomorrow, it's not going to give in to me, but tomorrow we'll do CrowdStrike. I think Salesforce is tomorrow with Snowflake as well. Here, it's pulling up right now. Yeah. So tomorrow, I'll do CrowdStrike, I'll do Salesforce, and maybe I can do another one here, maybe Snowflake. I don't know, maybe something else that we missed here. And then that's going to be it, guys. So take care. That's it for me. See you guys tomorrow. Peace.